Welcome back. Let's get a corporate conversation going. MPS is gaining after reporting a strong revenue growth in the first quarter. The company's top line went up by 36% on a year-on-year basis. That said, the margins came under pressure, down to 22.7%, and profits declined 15%. We have with us the management of MPS now joining in. Thank you very much for joining in, Rahul. The first question is on the top line. Now, you've delivered a 36-37% top line growth, but it's been aided by 2 acquisitions that you've done. Can you share what the organic revenue growth is for the current quarter and for the full year? What can you guide in terms of consolidated revenue and the organic revenue?
Thank you for having us, Reema, and happy Friday. So, yes, as you rightly pointed out, Q1, we do see a lot of contribution from both AJE and Liberate Learning acquisitions that we did last financial year. Overall, we're expecting 10-12% organic growth across our content business, 7-8% growth in our platform business, and north of 12% organic growth in our e-learning business. So consolidated, we'll see something like 10% organic growth. Over and above that, of course, we have the 2 acquisitions that we've already done, and we are planning an additional acquisition at the end of the year.
Okay. Rahul, hi, good afternoon, and thanks for joining in. Good morning, rather. You have projected a 25% revenue growth for the full year for FY25. Are you on track to doing that? And what is it? What are the triggers that are going to help you get there?
Yeah, so I think the 25% is not just the revenue growth, but earnings growth. We're expecting a sharp recovery on margins in Q2 itself. We are halfway into Q2, so we have good visibility. So overall, expecting about 30% revenue growth and north of 25% EBITDA growth in the year. In terms of what's really leading to that, of course, is 40% of our growth is coming from organic growth, as I pointed out, and the balance is coming from on the inorganic side. What we're seeing in the marketplace is slowly MPS, as our scale is increasing, we are getting access to many more opportunities that we would typically not get as the supply chain is consolidating and our customers are looking to work with scale partners, particularly after the pandemic when the supply chain was tested.
Can you explain the margin drop to us, Rahul? I think this quarter your EBITDA margins came in at 22.7%, which compares with over 31% a year ago. And even on a quarter-on-quarter basis, we've seen a margin drop.
So a couple of reasons. Firstly, on the e-learning side of our business, we are digitally working to improve the margin profile. So we started a couple of initiatives last year, which included more automation and AI approach in the development that we do. Additionally, we started embracing outsourcing and gig workers. As a result, for the last 6 months, we've had duplicated effort as we look for the workflow and the operating model to settle in. As you'll see at the end of the quarter, our headcount has taken a significant reduction in the e-learning business. And again, we're expecting a sharp recovery in the e-learning margin profile in Q2 itself. The second aspect is, of course, as I've shared previously, the acquisition of AJE was a loss-making asset. In Q1 alone, we've eliminated over $5 million of costs in wage costs itself, and again expecting a strong recovery. So it's largely got to do with an investment to improve the e-learning margin profile in the long term, and the acquisition of AJE, which has dragged the EBITDA margin in the short term, but we are very bullish about what that margin profile looks like from Q2 onward, and as well as at the end of the year.
Got that. And just to confirm, you spoke about a 30% revenue growth for the full year on a consolidated basis and 25% earnings growth, EPS growth, right?
Yes, that is correct.
Okay. You also right now just said that you're expecting a sharp recovery in the e-learning business. I think currently the e-learning business margins are 8.5%. What are the steady state margins for e-learning once all these investments, you move on to these gig workers, etc., comes into place?
So we're expecting to get to, in FY25, north of 25%, and north of 30% for the next financial year. So at a consolidated e-learning level, we feel comfortable to project over 25% EBITDA margins for FY25.
And you have this Vision 2027 plan too. 2027, which means FY28. I think that projects 30% margins for you on a consolidated basis. What is the top line likely to be?
So again, we are aiming for north of 1,500 crores in revenue. FY25 for us is an inflection point. The management team and everyone is gunning to make sure that we hit the halfway mark in FY25 from an earnings perspective. So overall, FY28, the goal is to get to 1,500 crores at similar margins in revenue. And this year, we want to get to the halfway mark.
Okay, all right. We'll let you go on that note. Rahul, thanks a lot for joining in and all the best for the quarters to come. Well, that's the word coming in from MPS. They have a very strong projection for FY25. They expect organic revenue growth of 10 to 12%. And, the trajectory is looking good. Let's slip into a quick break. When we return, we'll discuss market technicals with Mitesh Thakkar. Also discuss their top trading bets for the day. Stay tuned.